Hey everybody, Courtney Smith here with our February the 6th edition of Wall Street Winners. Let's dive right in here. So the market did exactly what I told you it would do last week, and that is it continued to rally. We're in kind of a zone where really we should be able to just keep on moving higher without any stumbles at all. Maybe a couple of days stumble, but no significant drops should be seen in the market now for maybe another month or so, and then we'll start to have some more regular retracements. But right now it's all clear in the market. Obviously, the Fed announcement last week saying that life is wonderful and that we're slowing our interest rate hikes to only a quarter and a quarter. That got the market super excited. Although on Friday, the latest economic news made people think, well, maybe Jerome was a little too quick at making those dovish statements. But nonetheless, it doesn't really matter. The market is what matters, not Jerome Powell, and it's going to be all clear for the near term. Over here, well, you just saw the S&P clearly just breaking these old highs over here. That's a major step forward. Over here, the Dow has yet to break those highs. It's the laggard among the three indices. As I've also been telling you, the NASDAQ looks like it's finally, I was a little early on the call, but it looks like the NASDAQ is now the leader to the upside. You can see that up here in the upper right-hand corner, the little green line shows that buying pressure is kind of stable. It's selling pressure that's declining. That's why the market's rallying, is not because there's new buying. There's not any selling. Over here, you can see the NASDAQ just exploded to the upside, then gapped up, then it set back, kind of filled the gap. Look at how the purple predictor is the most bullish of all of them. Now, what's the problem with this picture? Well, you can see the little green line got above 70, and when it does that, the market staggers and usually sells off a little bit. Now, the other two indices, the RSI is not anywhere near this overbought situation. So it looks like the NASDAQ might weaken a little bit this week. The other two might play catch up. But overall, it's still a bull market, don't you know? And all three indices are going to be moving higher. We got our seasonal buy signal here a couple weeks ago, so now we're putting on much bigger positions than we have in the past, 50 to 100% larger positions. This seasonal signal took a long time. It took us to January. We could have gotten into it in November, but we didn't. But now, all clear in this market. We don't have to worry at all. So here's the seasonal situation. You can see it's very, very good here. But you can see here in the later part of February, there might be a little bit of dip there. Maybe the NASDAQ is leading there. It got up to the 70 RSI. Maybe it's the leader. So we might see a little bit of a dip here late in February. And then look at this. It's all clear all the way until May. All the way until May. This will be the most bullish time of the year, is this period here. So after that little dip later, we're going to see the market just take off and do great. Why? Well, one reason is because we're seeing bond holders selling bonds and buying stocks. They're basically saying, why do I have these damn bonds? They're not going anywhere. Let me go buy some of those stocks. They're skyrocketing. I can make a hell of a lot more money in the stock market than I can in the bond market. And I can buy some of those high dividend yield stocks and get the same yield as my bonds. So let's go buy stocks. In addition, if they're going to buy stocks, they want to buy risky stocks. Look at this skyrocketing. Now, remember I told you that I thought that NASDAQ was going to outperform? This is one of the reasons. Our stock market risk indicator says that the market wants riskier stocks. That's NASDAQ stocks. That's meme stocks. That's crypto. That's all the stuff that did poorly in 2022. It's going to outperform here over the next several months. This, our exclusive stock market risk indicator, is measuring how much risk market participants want, and they want a hell of a lot more risk than they wanted for the last 7 or 8 months, where they didn't want much risk at all. Now they want it, and that really gets a bull market going when people want more risk. One of the riskier things is to buy global shares rather than American shares. They are riskier. And but I think we're going to start to see the U.S. market catch up to the global shares. Yield curve, I talked about that, nothing to say there. Bonds, I told you we'd stagger, go sideways, do nothing. That's basically what we're doing. And I think we're going to continue to stay very stable here in the bond market. Part of the reason is our indicators are very stable. You can see the CRB, very stable. Even gold hooked down. The 10-year treasuries in Germany, sideways. Look for bond yields to stay stable over the near run. Now, if they stay stable, and if interest rates are going up overseas, then that means if they're stable, then that's going to help out the dollar, and the dollar has perked up in the last couple of days. But I'm still overall bearish on the dollar. I have no position in the dollar right now that I remember. I can't remember. But anyway, I'm overall very bearish on the dollar for this year. Now, gold cracked hard on heavy volume. Look down here, the volume is very heavy. Now, one of the things you have to look at, which unfortunately occurred during the week, is notice we made a new high, and the RSI, that's the green line down here, it made a new high. Then the market sold off, and then we made a new higher close right here, but the RSI didn't. But over the next several days, it ended up doing it. Then it sold off again and rallied up and made a new high close. RSI did not. So we had two divergences. One didn't really work. The second one worked, of course, extremely well. I'm still bullish on gold. I don't really have a position in gold. I should have a position in gold. I do not have a position in gold. So this is very interesting to me. But this is the thing. I need you to think about this. This is a hard move down. The dollar moved up, so you would expect gold to move down. But gold is moving down more than the dollar is moving up, which is showing internal weakness in the market, which I think was also shown by these divergences in the RSI. So look for a more significant down move in gold, which would be great because then we could buy it at a much cheaper price. Our gold indicators shifted from 2 bullish and 1 neutral down to 2 neutral. So it's moving in the wrong direction as well. But like I say, long term, I'm still bullish on gold. Crude oil, you know, the Saudis came out and said, no, we're good with cutting our supplies by 3 million barrels a day. Yeah, well, so what? Demand's going down 4. So as a result, oil's moving down lower. We're going into a global recession. Nobody seems to believe it but me. Maybe I'm the one hallucinating, but we'll see. You can see, however, the purple predictor is coming down at a faster rate than the price action is, which tells me that the smart money is finally liquidating their positions in oil, but still remain overall bullish. Bitcoin's starting to stagger a little bit here. Once again, this is all having to do with Fed policy. We sold off a little bit. I still think there's manipulation going on, but well, whatever. That's what I don't. By the way, I don't care if market's manipulated. I just try to understand what the manipulation is, and then take money from the manipulators. That's all. No big deal. So, but anyway, I have no position in Bitcoin, and I really don't have an opinion at this point. I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second, but this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it does lead, it can, if you do it right, you have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Labs scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. Maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, it's, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I'd normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented as a formula, John Kelly, to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. I used many years ago. I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider membership program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. And you get that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really, quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.